You know, Alex, this fishing thing is surprisingly relaxing, but what's the deal with all these different baits you brought? Why not just use one type?
It's all about diversification, Jamie. Each bait works better for different kinds of fish. If I only brought one type and it didn't work, I'd be stuck catching nothing.
Okay, so you're saying fishing is like investing? Use different baits for different results?
Exactly. In investing, diversifying means spreading your money across different stocks or sectors. That way, if one investment doesn't do well, others can balance it out.
So it's like having backup plans?
Sort of. It's about not putting all your eggs or baits in one basket. If you only invest in tech stocks and the tech industry takes a hit, your entire portfolio suffers.
Got it. Diversification keeps you from getting wiped out, but doesn't it mean you might not get huge returns either?
True, but the goal of diversification isn't to hit the jackpot. It's to build steady, long-term growth while reducing risk.
Alright, so fishing with one bait is risky, and fishing with many baits gives me better odds. Makes sense. So Alex, how do I know how much risk I can handle? I mean, I'm not exactly a thrill seeker.
That's your risk tolerance, Jamie. Think of it like this. Some people are okay fishing on a quiet lake like this, while others are out deep sea fishing for sharks. Which one sounds more like you?
Definitely the lake. Sharks sound like too much drama.
Exactly. Your risk tolerance depends on your personality, goals, and even your financial situation. If you can't afford to lose money, you'll want to stick with safer investments.
Okay, so safer investments are like fishing here on the dock, and riskier ones are deep sea adventures?
Pretty much. And age plays a role too. Younger investors might take more risks because they have time to recover from losses. Older investors usually focus on preserving what they've built.
Alright, so figure out my comfort level, and that tells me how much risk I should take?
Exactly. Knowing your risk tolerance helps you pick the right mix of investments, whether it's safer bonds or riskier growth stocks.
Alright, Alex, I've got one more question. What if I invest in a stock and it starts to tank? Do I just watch it sink like a bad cast?
Not if you use a stop-loss order. It's like setting a safety net. You decide a price limit. If the stock falls to that price, it's automatically sold.
Wait, so it's like a fishing line that breaks when a fish is too strong? Saves your rod, right?
Exactly. Stop-loss orders protect you from losing more than you're willing to. It's a tool for managing downside risk.
But what if the stock bounces back after it's sold? Wouldn't that be frustrating?
It can be, but the point is to minimize big losses, not to time the market perfectly. No strategy is foolproof, but stop losses help you stick to your limits.
Alright, so it's about knowing when to cut your losses and live to fish another day?
Exactly. Investing isn't about never losing, it's about managing losses so you can keep going.
So Alex, what's the biggest mistake new investors make besides, not starting?
Honestly, making emotional decisions. Fear and greed are the worst fishing buddies and the worst investing advisors.
Okay, but isn't it hard not to panic if your stock is tanking or jump in when it's soaring?
Totally. That's why you need a plan. Set your goals, know your risk tolerance, and stick to your strategy no matter what the market's doing.
So, no chasing the fish that got away or jumping in after the big splash?
Exactly. Stick with the bait you've got and be patient. The market rewards discipline, not impulse.
Alright, so no emotional fishing or emotional investing. Got it.
Right. The best investors are the calmest ones. Remember, Jamie, it's a marathon, not a sprint.
Alright, folks, what's your biggest fear when it comes to investing? Let us know in the comments. I'll bet Alex has some advice for you.
And if you missed our last chat about how to start investing, go back and check it out. It's the perfect lead up to today's discussion.
And stick around for the next one, where we'll dive into reading stock metrics. See you there, if we catch anything.